a sense of capital. Hello, lads and gents. Welcome back to a new episode of A Sense of Capital Insights Time. My name is Julian and I'm very glad to have you in again. So today we will talk about the first investment portfolio update of 2024. But before we start with it, just a quick disclaimer that as always, this will not be any financial advice, consultation whatsoever, and there is no guarantee for correctness of the provided data. Okay guys, let's go. I don't know how it is in your country, but in my country, when the year comes to an end, a lot of people design a target for the next year, what they want to accomplish. And in my case, it was actually that I want to live a little bit healthier. Not sure if I can manage this or not, but another quite reachable target was that I want to simplify my portfolio and set the focus on the stuff I have the feeling I'm doing very good. And in the end, in my case, it is about investing in single stocks, and therefore I tried to get rid of the ETF section. And even if I never had bad feelings about it, now this case happens and I realized this target. And as you can see here, so I basically sold all the ETF positions which I was a shareholder of at the beginning of 2024. So among them is Nasdaq, US Momentum, US Small Cap, Europe Momentum, Europe Small Cap, Emerging Markets Small Cap, and last but not least, Japan IMI. So overall, I received roughly $14,000 by doing this. And part of it I reinvested in two stocks. One is very new, which is Grab, and I had the feeling I could enlarge a little bit the positioning I'm already owning. So therefore I invested roughly $1,900 into the stock. And on the other hand, I mentioned it already a few times in the past that my conviction regarding Perion is growing week by week. I like the numbers so much, I like the business so much, I like the company, the management, and therefore I really put my money where my mouth is, and I decided to invest the major part which was left, which is roughly $5,600 into the stock. What happened with the rest of the money? Look guys, I have a private life as well, and therefore I purchased some things which I hope will make my life a little bit easier in the future. Taking a look at my current investments, as you can see, nothing has changed too heavily. I worked a little bit on the overall slide deck design to create you better insights into my holdings, but that's it basically. As you can see, I'm currently owning stocks of roughly $77,000. And if you ask me, best case, from bottom of my heart, the target would be $100,000. I know it's very high. I mean, it's roughly 30% up year on year. And of course, if the overall macroeconomic situation goes bad, this is a very unrealistic target. But if the investment theses go as I expect they will go, then alone just a Hims and Hers position of 23% can have a big impact on the target of achieving the $100,000 this year. I think more realistic is something about 85,000, but it's not about the money, it's a hobby. If it's more, it's more. If it's less, it's less. It is how it is. Maybe then in the future I will achieve a higher yield if this year is not successful. Now that I have 100% focus on single stocks, I've decided to add a valuation sheet to the regular investment portfolio updates. As you can see here, all stocks I'm owning, Alf and Grab, Hims and Hers, Indie, New, Perion and Stone Co. are stated in this table. You can see the sales growth, which is always an expected number and a mix out of 2023 expectations, the ongoing business year, and 2024 expectations, the next business year. Then you can see here as well an EV to sales ratio, which I calculated on the same yearly base, a price earnings ratio, and then out of it there results a fair price multiplicator. I already explained it in the Grab analysis that this is not like if a stock has a $10 price and the multiplicator is read, that doesn't mean that the fair price is $30. It's just an indication in which direction the potential is existing. And as you can see here, when we talk about the potential, just on the numbers, primarily driven by sales growth, because sales growth, I put the most weight on it, and Indie has 75% of it, expected for 2023, 2024. So this of course is heavily affecting the fair price multiplicator of it. And you can see the newest stock I own, Grab, with a fair price multiplicator of 1.3, is not looking that great. However, just to give you an example, PayPal, for instance, has a fair price multiplicator of 0.8, Uber has 0.8. A lot of other stocks which you are very aware of have a fair price multiplicator of 1 or below. So talking about the stocks I'm owning, at least based on my evaluation, they are all priced fair or actually cheap. What this table is showing you as well is how, in my opinion, cheap Perion is rated at the moment. I mean, sales growth is not that strong, but if you're looking for a stock with a high focus on profitability, this might be a very strong catch for you. I mean, it has an EV sales ratio expected 2023-24 of 1, and price earnings ratio of below 10, and a fair price multiplicator which results out of it of roughly 4. That's very, very strong, very, very solid, and because of this I had no other choice than investing a larger chunk of money into the stock. Here you can see as well the latest earnings where I have added an opinion about. So from my perspective, only Alphen and StoneCo really surprised with a very fresh, very good earnings level. The other ones, even if they're looking good on the first glance, are rated more or less neutral, symbolized by the yellow color grade. And out of all these different aspects, I've created a sense of capital ranking, which I will update month by month. But I can tell you already now, it's very unrealistic that I will change the ranking on the monthly base. Last year I didn't touch it once, so it very likely will stay as it is. And last year and this year, unchanged. Number 1, Hims and Hers. No doubt about it. Still so confident about the stock and feeling so well by being a shareholder of it. Second position already mentioned, Perion. Third one is Nubank, even if it's not the cheapest one and maybe the fair price multiplicator is not showing this that clearly. I think the story behind it, the macroeconomical potential of Brazil, Colombia, Mexico is so high. I had no other choice than put this on rank 3 in my opinion. Number 4 is Alphen, the Dutch electrical equipment infrastructure provider. I have high hopes here. It's kind of a turnaround story. The last earnings already showed that the momentum is starting again, and I'm very confident that this momentum will getting stronger and stronger during the business year 2024. Position 5 is StoneCo, which I ranked actually on position 2 in the last year. Why? Because it just developed so heavily during the past months. The price is increasing very heavily. It's not that cheap anymore. And even though I think it's a true cash machine, it sometimes reminds me to Meter, but on a lower scale. I like growth very heavily, especially revenue growth, and I can't put it too high anymore. That's just the case. And on number 6 and 7, we're talking a little bit more about gambling positions. Grab, the big story play, which I analyzed in the past weeks. And last but not least, placed 7, Indie, my bet with the by far biggest background of a sales focus. I have high hopes here as well. Honestly, sometimes I have difficulties to catch the business itself and the components and the services they provide, but the numbers are looking fine. Very likely they will reach profitability this upcoming quarter earnings results, and therefore I stick to this position. Coming to the performance, and as you can see on the first glance by looking at the yield per month top left chart, the pillar of Indie doesn't look too great, and it's definitely heading into the wrong direction with 25% minus. I mean, I'm still in the negative of only roughly 10%, what you can see on the bottom left chart, but it was a little bit uncomfortable, let's say it like this. And I think the major reason for this is basically the results of Mobileye, which is a daughter company of Intel. I think it's still a daughter company, but don't nail me on this. However, the results and the guidance was very bad, and Mobileye and Indie are active in the same sector, and then of course the stock price of Indie is affected by these bad results of Mobileye as well. But who knows, maybe Indie is taking share of Mobileye and actually is benefiting out of the situation. We will see it very soon in the upcoming earnings results. In general, the month was not a very successful one, no matter if we talk about Alpha with -8%, Grab 6%, Perion 4.5%, my big bet, and Stoneco with -4.5%. All of these stocks doesn't look too well. Good was that I didn't lost more money on Hims and Hers, and on the other side, New again had a very positive period with more than 6% up. The yield year to date, of course, is currently the same like the yield per month, so this will change from the next investment portfolio update on. And when we're focusing the yield since acquisition, I mean, New and Stoneco looks quite impressive with roughly 80% or 90% into the green. But what I really like more is actually the story behind Hims and Hers and Alpha. Both stocks, especially Hims, I'm a shareholder of roughly 1 year, and most of the time I was losing money on it, and now finally I hit the break-even point. Even if it was very slightly hidden, it was hidden, and now it's positive, and I hope this price incline will go on. And on the other hand, Alpha with 15% up, great as well. I was down with the stock roughly 30%, and to see it now up, that almost makes me a little bit proud. Why Perion had a bad month, my assumption is that it was impacted by the results of Microsoft, which doesn't have been too good, or at least the market didn't welcome the results of Microsoft too positive, even if the results of Microsoft, in my opinion, wasn't so bad. However, on the next day, Perion decreased very heavily, and the reason for this is that I think 30% of the sales of Perion are getting created by search ads promoted through Bing, the search engine of Microsoft, and yeah, you can do the math by your own, I think. Getting even more detailed about the performance and comparing the Sense of Capital portfolio with the big benchmark ACWI, IMI. This year is starting like the last year started, so there's already a gap of roughly 7% between my portfolio and the benchmark. Crazy. This aspect is bothering me not too heavily, honestly. However, I've decided to integrate the benchmark into the chart below, and you will see over the future time periods well illustrated how the Sense of Capital portfolio compared to the benchmark will develop. Losing 25% because of Indie, yeah, that was actually the case in the past 4 weeks. However, I'm quite confident still about this investment, no doubt. I mean, I was more in the red in the past, and in the end I purchased it because it's a very volatile stock and because it has a certain down but as well upside potential. Chances and risks are, in my opinion, very much in line. However, I need to put the bar from relaxed a little bit more into the stress direction, and this was not affected by Indie. It was majorly affected by the, let's call it, positive stress level resulting out of the upcoming earnings results. I'm so excited what will happen with the different stocks I'm owning. I mean, most of them I'm owning roughly for half a year or a year. I'm getting more comfortable with them. Most of the business are growing into the right direction, and I think it's just a matter of time. But overall, honestly, I like that the year starts a little bit worse and then hopefully gets better than taking the opposite development and starting very positive and then it's very bad. So hopefully this year is again in 2023, and together we will figure out if that's the case. So what is the outlook for the upcoming month? Guys, honestly, I don't plan to invest too much money in the upcoming month, but as well not in the upcoming 11 months. So more or less the portfolio is the portfolio, and somehow it needs to survive on its own. And just if the prices decrease very heavily, then I will leverage again and invest heavier into the single positions. But till this point in time, I will stick to it how it is and make sure that the existing debt level getting lower and lower. Currently we're talking about $16,000. And besides this, I would just enjoy life. I'm simply very comfortable and feeling good with this portfolio, feeling good with the decision to making this YouTube channel. And I just want to stick to it and not touch it and change it too heavily. I'm looking forward to provide you more and more videos this year. There I will set on a higher focus for sure. And I just hope from the macroeconomic point of view, this year will be a regular year, not too shaky, not too eruptive. And if that's the case, then I'm very confident that the companies I'm owning will create a strong performance. Guys, after finishing recording the different clips for the Insights time period, I figured out I used the wrong design, the wrong frame. Of course, that's not the pitch time episode, that's an Insights time episode. I don't hope I confused you too heavily. However, I hope you enjoyed the episode. I'm strongly looking forward to see you again, latest in the next Insights time period, if not on the upcoming streams. And guys, if you liked this episode, please subscribe to the channel, give me a like, leave me a comment. That's always very motivating and keeps me going. Thank you so much. Take care of yourself, stay healthy, and see you next time. Bye. A sense of capital.